Okay, so the repo rate is unchanged, and that is in line with the 90% of expectations that we had. The RBI has kept the repo rate unchanged in its Feb 3rd policy. That's the big news which is coming in. Remember that there was no incremental inflation data for the RBI to work with. It was lack of information that they had.
Ekta, Bank Nifty is down 150 points. Let's go close to Lata Venkatesh. Lata, Bank Nifty is now down almost 200 points. No rate cut from the RBI.
There is absolutely no change. No change from the RBI, and no indication as to when they will change as well. In fact, this policy is the most neutral. They have not given us any indication. There is no change in the GDP growth forecast. There is no significant change even in the inflation forecast. It was expected to be below 6%. The new chart shows that it will be a little under 6%, maybe 5.5%. No change in the Jan 2016 inflation forecast of 6%. Nor have they given any indication as to how they will move incrementally in terms of inflation. It is quiet. I'm not saying it says they will not move, and it is not saying they will move. It is just quiet on the entire aspect. There is no guidance at all.
Lata,
we really will have to wait for the governor's statement.
Lata, what about this SLR cut?
Yeah, go ahead, Anuj.
What about this SLR cut by 50 basis points?
There is a SLR cut of half a percentage point. I don't think it's going to make a very big difference because most banks are very well higher. But for private sector banks, it will make a difference. There is an SLR cut of 50 basis points. So no change in repo, no change in CRR, but 50 basis points cut to 21.5%. That is the SLR. The export credit refinance has been completely done away with. That doesn't matter because it was not being used very much. RBI says we will provide the same money through the repo. There are very big changes in the debt market. For instance, FIIs could buy corporate debt of any maturity, whereas government securities, they had to buy only government debt over 3 years maturity. Hereafter, even corporate debt FIIs have to buy only above 3 years maturity. As well, there is a major concession for those who hold FIIs who hold government securities. The limit of 30 billion is reached. So new FIIs could not buy. But now they have been allowed to reinvest the interest that they earn, the coupon that they earn. That can be reinvested in government securities, even though they are above that $30 billion limit. So there will be that much more FII demand for government securities, but no increase in overall limit. Corporate bonds, only 3-year maturity. So actually this tantamounts to telling people, don't invest, I don't want FII money. It's almost as much as that. Those of you who are taking money outside, there is a little more liberal reforms. Until now, an individual could spend $200,000 in a year. Now you can spend $250,000 in a year. What is coming out very clearly is the Reserve Bank is terribly scared of the appreciating rupee. So if you want to spend dollars, the Reserve Bank is going to open the doors wide. If dollars are coming in, the doors are not opening any wide. In fact, they are telling them that you have to only invest in securities above 3 years residual maturity. There is also some freedom given in terms of those who do exchange traded foreign currency trading. They can trade up to 15 billion in dollar rupee exchange traded currency futures, and they can trade up to 5 billion in the non-dollar pairs. That is euro yen and euro and yen basically. So that is another freedom given for exchange traded currencies. There is some liberalization even for NPLs. The banks have some advance. The banks have had a problem so far in terms of assets where the management changes. When the date of commencement of a project is changed, the banks don't have to recognize a loan as NPL. Now, if there is a management change, even then banks will get 2 more years and will not have to mark the asset as NPL. That is a major asset for major help for banks which are able to effect a change in the management of a loan that has become bad. It is an incentive to force them to change the management. Okay, so USD INR Pound INR and JPY INR, all these pairs put together, you can take 5 billion of exchange positions. So there is a lot of liberalism with respect to exchange trading future currencies. There is liberalism with liberal moves with respect to taking out currencies for an individual, and also fairly liberal announcements with respect to restructuring bad loans. Like I told you, you can if there is a management change, banks will not have to mark a loan as NPL for a further period of 2 years. Also with respect to price of the shares, there is some liberalism, but that is yet to come. When banks are restructuring loans, the conversion of loan to equity, there is some liberal moves coming, but that will be in consultation with the SEBI. I'm not able to give you the exact words because this is a very long document and we got all of 20 minutes to read it. There have been 72 applications for small banks, 41 applications for payment banks. A committee with Usha Thorat and Nachiket More is being constituted, called the External Advisory Committee, and they will look at these licenses. The Usha Thorat committee, my sense is, will look at the small banks, and the Nachiket More committee will look at the payment bank licenses. These are the major announcements made. There is no guidance given. That is the biggest thing. SLR cut, no repo cut, and no guidance given as to when and how the Reserve Bank will move in future on rate cuts. Anything on markets, Anuj?
Well, Lata, the Bank Nifty fell about 180 points, but since then has recovered a bit, but still trading down about 100 points. So it's been very volatile. The Nifty, by the way, is still quite resilient. In fact, it never fell along with the Bank Nifty. It's still just about 6 points in the red, and the mid-cap index is still outperforming. So quite clearly, the market is not perturbed by this no rate cut. Market is reading it as a completely neutral policy. Though must say that Axis Bank is down about 2%. That's the stock which normally goes into these events with the most bullish positions, and that's why you've seen the highest impact on that particular stock. That is down about 2% right now.
Anuj, we have to be very careful in the governor's press conference because no guidance is given, and I would assume that something by way of guidance we will get from the statement. I'm amazed that nothing has been given in terms of a guidance hereafter. Although they say that they will look out for the fiscal deficit numbers, they've also said that although their forecast for GDP is 6.5%, it will be revised when the CSO gives the current year's GDP number according to the revised projection. The CSO is also going to revise the CPI with a new base year. So even the inflation levels obviously will be recast when the new base year is constituted. I think there are some fairly liberal norms for those who want to take money out, and also fairly liberal norms for restructuring of loans, but that will take a little bit of understanding. I'm not able to explain it very quickly now. The restructuring of loans, especially conversion of loans to equity, the price of the shares will not be taken as they are listed, because when a loan is getting restructured, when it's a CDR case, the price of those shares fall a lot, and therefore it is disadvantageous for the company to convert the loan into shares at that price. They will be allowed to convert at a higher price, but those rules will be done after consulting with SEBI. They could be given a waiver. The SEBI rules of, the average of the last 2 weeks or the last 6 months, that could get waived. That is what has been written, but that is only after consultation. The detailed guidelines will come afterwards. Okay, to the economists, what do they have to say?
Yes, let's in fact go across to Mr. Sriram, the Managing Director of State Bank of India, who's joining in as well. Mr. Sriram, over to you. This was on expected lines.
Yeah, it was. Actually, the governor has stayed to his script, and I think the guidance that he gave us on 15th of January, more or less, it is within the same guidance, because there has been no data on inflation since 15th, and as well as some of the other parameters on which he has talked about regarding fiscal consolidation and the steps to overcome supply constraints. I think these are issues that will probably come over a period of time. And as regards guidance on this particular policy, I think it is too early to change the guidance. It is already, it is well defined on the 15th of January guidance that he has given. And I'm sure going forward he will be monitoring these parameters on a closely and be driven by that. So yes, I would say that it was expected. He stayed to his script, and I guess that is what he's been doing all along.